NBFC and banks, this has happened first time in the country that the RBI has come out the circular, the guidelines where the RBI is looking, or the government is interested that both the organization can join hands, and they can lend to the ultimate borrower, where the advantage of the NBFCs, I think they have the reach, they have the collection ability and all, so which can be I think shared between both the banks and NBFCs, and these advantage can go to the ultimate borrower in the tier 3 and tier 4 locations and the rural areas also. And the banks have a lot of surplus liquidity, and they have the money also. So this can be, I think, leveraged, and the advantage should go to the ultimate beneficiary. It's a very, very good tool of co-lending. And so today we are planning to discuss, or we are discussing on the co-lending from signing to execution. So as a layman, I would like to just brief you that what is co-lending actually. So co-lending is the partnership between the bank and NBFC, where the bank is giving 80% money, NBFC is giving 20% money, and the money is going to the escrow account, and from there it is going to the ultimate borrower, and the entire sourcing, collection, the entire the monitoring is the responsibility of the NBFC, and the banks are basically monitoring it also. But practically the front end is NBFC, and the banks are the back end in this co-lending arrangement. So in 2018, this first time this co-lending, I think guidelines came in the picture, and this was a co-origination. That time it was started, and some of the banks and NBFCs joined hands, and they have started this relationship. And in 2020, the government has come out with another guidelines, which is called co-lending, where they have given a lot of flexibility in terms of product designing, in terms of method of co-lending, and in many areas. And after that, we have seen there is a lot of I think interest from both the sides. And but I can I think understand from the market news that almost 60 to 70 tie-ups are there. The MOU have been signed till now with the banks and NBFCs, and across the country, these NBFCs are spread across the countries, and all the banks are very keen to go further. And I will see that there are disbursements also. There are I think execution also. And if you see, we have today the SBI and PNB senior executives, and you know that both the banks are the large bank of the country, and they will speak about the co-lending, whatever the co-lending tie-ups they have done, whatever the challenges they have faced, and how they are overcoming the challenges also. Along with that, we have the two NBFC players also, fintech and NBFC players, who are deeply involved in the co-lending process. I will say they are the largest one, the co-lending side in terms of execution, because signing, as I told, that 60 to 70 tie-ups are already there, but still the execution is a big challenge. So the technology is one of the area which is creating some kind of hurdle. Then the product and policies of NBFCs and banks, there are some, I think, different policies are there, because NBFCs are working in a different set of policies, and the banks are working with a different set of policies. So these challenges are also coming, and then the product designing and the SOPs. So we will discuss in detail what are the challenges, what are the opportunities, how the banks are overcoming it and the NBFCs are overcoming it. But I think it's a good tool which is, I think, helping to the NBFCs and the banks and the ultimate borrower, because at the bottom of the pyramid, the borrower who are at the small areas, and they are the small borrower, they are getting the benefit in terms of either in the rate of interest, so because the blended rate of interest has to be charged to the borrower. So the ultimate benefit is getting passed to the borrower, and then the other way also, the excess of money or excess of borrowing also is now easy for them. So say, I think win-win for everybody, but because it's a new baby in the system. I think almost 1.5 years have been completed till now after the new circular of RBI, and government is also very keen. So we will discuss today on this the complete co-lending and how what is the future of this also. So friends, I would like to welcome to the audience also the people who have joined in this webinar, the today's webinar from the different part of the country. And it shows that you are interested to know the entire the co-lending process. And maybe you might be looking to tie up with the bank. So we have the two large banks. They will speak that how you can approach them, how you can get the tie up, and the out can be taken up further also. So I will not take much of the time. There are a lot of I think database is there which can be so the co-lending policy is one of the important thing. So it has been made it compulsory by the RBI that every bank has to publish the co-lending policy on their website. So I will suggest to the audience, if anybody is interested to tie up with any bank, they can go to the website of the concerned bank. They can download the policy. They can understand whether they are eligible for the co-lending tie-up with the particular bank or not. Actually, if I see, because we have studied the policy of all the banks, so the majority of the banks have put the condition in terms of rating, the profitability, the vintage of the NBFC, and the net owned fund also. So these and the NPA, the gross NPA and NPA, these are 5-6 major criteria are there which need to be kept in mind before I think approaching to any bank. Because if you are not falling in that category, then I think it will be very difficult for you to get the co-lending tie-up with a particular bank, unless until say a very compelling case where the bank is willing to go for the deviation with the policy. So, so I will advise to all the NBFC players before approaching to the any bank, they should go through the policy and then they should see that whether they're eligible or not. And other than that, if you see the every bank has process which need to be followed up, and after that the product designing or the SOP have to be discussed, and then you can go further for the entire disbursement and the execution of the co-lending. So friends, we have very eminent speakers who are from bank and the NBFCs. So we would like to discuss with them about the entire co-lending process. So we have Mr. Santanu Agrawal, who is the Deputy CEO of a company called Paisalo Digital. He's the Chief Innovation Officer also of this company. And this is a very old company, started, I think, more than 20-25 years old. And they have transformed themselves as a fintech. I think India is I think the fintech company which has transferred from the traditional NBFC to the fintech company as of today. And they are very successful in the co-lending area. So Mr. Santanu is a young entrepreneur, and he has a lot of passion, a lot of excitement or interest on the co-lending side. And so Mr. Santanu has done a lot of, I think, things in the co-lending side, and he understood the entire process also. They have tied up with many banks. They have done the disbursement also. And somebody has told me that I think in your system, if somebody is applying for loan, he can get the loan within half an hour. So something which you have done, I think, is very, very innovative. And you must be thinking to reduce it further also from half an hour to 15 minutes, or maybe even maybe 3-4 minutes. So like the Bajaj Finance is doing there, they are claiming that they are disbursing the loan within 3 minutes actually. So I think this is the beauty of the technology or maybe innovation. So Mr. Santanu, first of all, I would like to welcome you and thank you for joining with us in this webinar. So we would like to understand from you this brief about the Paisalo, because many people are not aware what is this Paisalo basically. So they would like to understand or know about the Paisalo. And other than that, I think because you are doing the co-lending with the banks, so if you can give your experience or journey, which is from the signing to the execution, because there are a lot of process, lot of I think requirements are there. So if any NBFC would like to go for the co-lending, how they can prepare themselves, and what are the challenges are faced, and still what are the challenges which are still there in the system. So over to you, and thank you very much.
Thank you so much for the kind introduction, sir. And thank you everybody on the side of attendees. And a warm welcome to all the panelists also from the co-lending discussion. A brief about Paisalo. Paisalo was originally started in the year 1989 and we went through various cycles of loans as and when the time came. And shifting all of that history behind, we decided to convert into technological operation in 2014. So we were also one of the first KUAs and AUA of Aadhaar when it was available to NBFCs. So Pesalo was one of the few beta testers which was inducted by UDAID for creation and testing of the eKYC and e-signing libraries that are used currently. So we were one of the first ones to do that. The other first thing that we were at the first one to do that was co-lending. So co-lending originally came out in September of 2018 as a discussion paper known as co-origination. And we, with the help of State Bank of India, became the first NBFC in the country to do a co-lending arrangement in 2019. The same circular was later amended in the year 2020. So on 5th November 2020, RBI revised the co-lending circular, and it included co-lending, but also allowing a back-to-back disbursement as well as a disbursement in co-lending via securitization. So they removed the minimum holding period from the securitization section, and they allowed a DA sort of a transaction for doing co-lending. Again, in November, we again became one of the first NBFCs to sign with SBI on the revised arrangement and take it forward. In terms of the challenges that are faced, or in terms of the onboarding processes, the biggest thing is that co-lending is a very new age infrastructure, is a very new age sort of a policy. It's a policy which allows the banks to utilize their cost of funds better, as well as utilize and capitalize on the NBFC's reach and the ability for repayment and technological platform. So the biggest, we don't see a big hiccup in terms of co-lending in the space wherein we see that there is a disagreement or a dissociation, or we see a major policy change that needs to take place from RBI side or the banking side in terms of implementation and execution of co-lending. The biggest thing that we see is that there is a big business transformation that is taking place in the lending space. This is the UPI moment in the lending space. What UPI did to payment gateways and payment structures is what co-lending is doing to the lending space. So we have to be better prepared for this business transformation, as this business transformation is going to result in a stronger growth momentum, better customer experience, is going to result in additional cross-sell, and a better credit ALM in improved liquidity across the banking balance sheet and the NBFC balance sheet. So the primary thing that we see in terms of setting up a co-lending with a bank or an institution is the technological integration. That technological integration, so there are, let me elaborate a little bit on this. So there are two ways of doing co-lending. There is a CLM1 and there is CLM2. Under CLM1, the banks and the NBFC server are interconnected and integrated. The decision is taken on the spot, and the disbursement happens on back-to-back basis, which means that there is a disbursement escrow account. The NBFC and the bank take a joint and independent decision for co-lending. The moment both of them have agreed to proceed with it, the NBFC transfers their 20% into the escrow account, and the bank transfers the 80% simultaneously. The moment it hits the escrow account, 100% of the money is transferred to the bank account of the borrower. That is option one. Then there is option two. Under option two, the NBFC disburses 100% of the disbursement first to the borrower, and then at T+1, T+2, T+3, depending on the individual credit underwriting policies of the respective co-lending bank, the bank reimburses for the 80% by doing a securitization transaction in form of direct assignment. Now, in both these cases, the most important factor other than sourcing the right asset quality is the technological integration, which has to take place right from the LMS level to the CBS level. Because co-lending allows you to have almost unlimited capital as long as you have your access to the 20% incremental capital, which is needed to scale the book. So what is required is a strong IT integration between the banking server and the NBFC server. Fortunately for us, two of our biggest co-lending partners, SBI and TNB, have been very aggressive in this space. And they've been able to create the API infrastructure needed to take either of the spaces, integrate in either of the spaces, and disburse on back-to-back basis in either of the spaces. So that is one thing that banks will have to understand. for this business transformation to take place of the importance of technology. So,
Okay, good. I think you have given very good insight about the co-lending outlook, the outline of the co-lending actually. But I think Santanu, we would like to go in deep from your point of view. So there are 3-4 stages of co-lending. One is, I think, tie up with the banks, so signing of MOU, which is a kind of ceremonial activity where definitely there are a lot of efforts are to be done in that the signing of MOU. Then the implementation of the entire process and the technology. These three, I think, and the fourth is monitoring. So if we would like to see all these stages, so because you have already tied up with bank, so in these 4 stages, how would you like to advise the NBFC which are looking to tie up, how they can prepare themselves, how they can approach, and the technology also, which one of the important areas. So whether they should outsource the technology, they should develop at their own. What are the basically the implications of these things, and how they can go further?
Absolutely. See, the first 2 steps are the easy ones. That is all a data-driven process. As long as you have had a very strong corporate governance and a strong balance sheet, the first 2 processes don't take time. You can approach a bank, create any bank which is ready to do co-lending, offer your expertise on the specific product type that you wish to lend. So for example, let's say you approach a bank and you want to do income generation, small ticket size income generation loans up to 2 lakh rupees. As long as you can prove that your underwriting is going to result in better yields for the bank by reducing their acquisition cost and also ensuring that the NPAs are maintained at 2% or below, including write-offs, the first 2 steps are the easy steps. It is the third and the fourth step, which is the integration with the server and monitoring of the portfolio, which is the difficult step. So number 1 step, let's assume technology. Now, every bank and every NBFC has their own way of looking at technology, right? Because banks are a walking behemoth, it takes time for them to move, it takes time for them to adapt to the new technologies which are up and coming in the market. Wherein NBFCs are the nimble players. They can easily adapt to the new technology, they can adapt to new technological stacks, they're very open to the change which is coming in and very adaptable to the change. So what in terms of technological integration is needed is that understanding from both the sides to be able to open their books and resources and technological stack on both sides so as to that the both sides are comfortable in understanding exactly what sort of structure, resource, and planning is needed for that integration. I'll be very honest also, integration is not something that you can expect to do in about a week. It will take a good quarter or 2 to understand what exactly is the bank looking at and what exactly is the NBFC looking at. There are multiple factors that you have to keep in mind with related to the borrower data, which related to security, with relation to the RBI compliance on KYC, the master circular compliance on KYC. So it's a long process. But at the end of that process, you do end up creating a big value creation, not just for the bank and the NBFC, but for the borrower also. Because you give him a platform which is easy, you give him a platform which is available, aware, and affordable, which is what is required in today's society. So definitely in terms of the technology, you do need to sit with the bank, with your co-lending partner a lot more and understand the needs and exactly how you can structure the deal better. I don't believe in outsourcing this technology because I believe there are multiple factors that need to be taken care of before this co-lending tie-up of 80-20 can be done. We can maybe definitely consider like a middleware solution which just connects two players, but in terms of the outsourcing, that would not be the right decision on either part of the parties, because there is a lot of sensitive information and a big quantum of money that is involved, and that would require a lot of trust between the parties. So that is, I am not very pro on outsourcing, but if I see a solution which creates a seamless platform both for the banker and the NBFC, then that is definitely I can look at it in terms of that, because it's going to create a seamless platform not just for the bank but for the customer also. In terms of the recovery, now here comes a slightly different aspect. NBFCs, multiple NBFCs have their own policies for monitoring, and banks have their own policies. Most NBFCs, they work on a 360-day model, while banks work on a 365-day model. In addition to that, most NBFCs will work on a principal interest and then late interest and penal interest model, versus a bank would typically work on a late interest, and then principal model. So over there, probably I would say the NBFC will need to step up. See, you are you have to understand that a banking policy and an NBFC policy is totally different. The NBFC needs to step up and they need to get in touch with the banking policy, because it's easier for the NBFC to adapt that structure rather than asking the bank to change their entire structure for one tie-up of an NBFC. So I believe the easiest solution for something like that is basically adapting the accounting principles of the bank, or probably improving on the accounting principles of the bank and not forcing the bank to change their accounting principle. Number two, again, I am going to say this again, but technological integration, having the right dashboards, having daily MIS reports, and having the right set of tech stack becomes very critical to maintain the data of every single borrower, because you're dealing in lakhs and lakhs of borrowers here. For example, over at Pesolo, we have serviced more than about 150,000 borrowers already in the co-lending space. So if you don't have the right structure in terms of your recovery, reporting, and MIS generation, and it should be a totally automated process. You should not have somebody compiling an Excel list and then bulk uploading that Excel list to the bank, and when the bank opens up, the bank is deputing one CM or some person at a level who's individually going and reconciling the accounts. It has to be a totally seamless structure for this to work. So obviously the easiest solution would be that the NBFC goes ahead, creates a different business vertical for co-lending, adapts the banking policies of accounting and recovery for the same, and figures out a way wherein this technology can be integrated for daily reporting and recovery and control mechanism. That's the easiest way to do it. That's how we've been so successful with SBI and PNB.
Okay, great. Thank you, Shantanu-ji. I think you have given very good insight about the co-lending process. I think one last question which we'd like to take from you. So, because you know, Resurgent India is one of the leading investment banking firm, and we are helping NBFC in this co-lending process also. But the challenge which is coming, because I think we have approached to many NBFC which are looking for co-lending. That one question is in their mind. They are saying that they want to grow their book. So they are saying in case of co-lending, the 80% book will be the bank book, 20% will be in their own book actually. So what is the excitement for the co-lending? Because these companies, there are many companies which are having this thought in their mind, or this thing in their mind, that why to do the co-lending with the banks, why should not do the own book lending actually. So if we see from the Pesalo point of view, if I see your balance sheet, your net worth, your debt equity ratio is very low, and in spite of it, you are going in co-lending, and liquidity is not a challenge for you also. So I think this is a very important question, which is I think quite practical also, where the companies are having in their mind. And so if you can highlight on that, what excites you to go in co-lending, what is the advice from your side for the other companies? Yeah.
See, there's a very famous line. I think I heard it a couple of years back before Steve Jobs died. And he used to say, I skate to where the puck is going to be and not where the puck has been. So this is exactly what is taking place in the lending space right now, right? In terms of the bank, any NBFC partner saying that they want to scale their own book, there is a limited scalability because you are going to have a lot of your own, you're going to have a big dependence on your fundraising capacity, as well as your incremental capacity to raise and put in capital in that space, right? So over here, it's about creating it's about creating a scalable business, right? So co-lending basically allows you to do three things. It allows you to create a strong, stable, and scalable foundation, which is the most important thing. It allows you to create a scalable foundation with the great risk mitigation in place. That's the advantage from the NBFC's point of view. Now, let's say I want to create a 1 lakh crore book this financial year. As long as I have the 20% of the incremental capital needed for my 20% on the 80%, I can create that book. Vis-a-vis, When I am there in the market to create a 1 lakh crore book directly out of my capital base or my debt base, I would have to go out and run multiple shows or fundraisers, or I will have to go talk to equity guys, which I do. Right? I will have to go approach banks for debt or mutual funds or insurance companies or HNIs for the same, which will increase my OPEX on my side in terms of the time. That's number one. Number two, let's say if I am a normal NBFC, I'm lending, I have my own book. You're aware about it. I have my own book, and my lending yields range from 14% up to around 18%, right? Now, when I do something like this, right, I am getting approached by a borrower which is typically rated triple B. Just for the sake of the example, we don't take a credit rating from small borrowers, but for the sake of the example and convenience, it's a triple B rated borrower, right? Now, if I want to improve my scale, I have to reduce my rate of interest. But the problem with NBFCs is that NBFCs cannot ever match the cost of funds of a bank, right? So I have to figure out a way to reduce my interest, increase my asset quality, also decrease my NPAs, service the customer, and also manage my OPEX within the rate of interest that I'm charging. So the way for me to do that is with co-lending. Because in co-lending, there's a blended rate which is getting offered. So for example, let's say I charge a 18% on my 20%, and let's say the bank charges a 10% on their 80%, right? That roughly gives you 12% rate of interest. I think I'm right. Yeah. Which allows me to match my NIMs, which allows me to underwrite the best quality, allows me to have the best customer, improves my scale, which otherwise I couldn't do. And at some point of time, India is going to I would not say some point of time, I would say in about 3 years, we'll be approaching a space where these interest rates are going to come down for the lending space to borrow to have this customer acquisition. Because unlike what was happening, say 5 years, 10 years, 15 years back, the new borrower base is coming out to be quite literally very digitally literate and very financially literate. So for somebody like that, you need to create an atmosphere wherein your debt does not become a burden on him. He is able to scale up his operations or run his operations and is able to live a decent life from the basic cash flows that come from it. So for example, like when you do, let's say a corporate lending, you do run it on the cash flow levels, right? I can't go ahead and do corporate lending at say 20% or 18%. That money is going to get defaulted because the rate of interest cannot be sustained by any corporate. So the corporate rate of interest, now if you go 15 years, 20 years, 25 years back, that was a very reasonable rate of interest because the margins was quite up. So we are approaching this space. So it's all about that. So a lot of the NBFC players who are saying that they don't want to do it, they want to scale their own book, in my opinion, they will not have a choice in the next 2 years. Co-lending will be the only way they'll get the money from the banks.
Very good, Santanuji. I think you have given a lot of food for thought for those companies which are, I think, having some kind of different thought process. Even everybody has their own, I think, policy, own, I think board discussions. But I think something is there which I think will excite them, or they will think again about this process. So thank you, Santanuji, for your kind deliberation. Now, friends, we have Sam Stavreji, who is the DGM of State Bank of India, SME unit. And as you know that SME, this State Bank of India is a very large bank, and the largest bank of the country in terms of PSU bank. And Santanu, Sam Stavreji is having more than 20 years of experience in banking. He has worked in various departments also. And currently, he deeply involved into this co-lending. I think the entire co-lending process of SBI, where he's making a policy, and then the tie-ups, and then the implementation of the co-lending also. So, Sam Stavreji, I would like to invite you for your deliberation. Are you there, sir? Or I think Stavrej sir is. Okay, so I think he's not available at this time. He may be offline or something. So we'll invite him after some time. So friends, we have very senior banker with us, Sri Surendra Kumar Dikshit ji. Dikshit ji the CGM of Punjab National Bank. As you know that Punjab National Bank is a very large bank again, and they are known for the MSME lending, also the priority sector, and CGM sir is having all these three areas: retail lending and the SME lending or priority lending. I think he is the person who is the pillar for co-lending in the bank, actually, what I can understand. Because in co-lending, the priority sector lending is compulsory. Because if you want to do the co-lending as a bank, it should fall in priority sector. So whether it's MSME, retail, or the agri, all these three key areas are there where the chaser is having the command. So, sir, first of all, I would like to thank you for joining with us, and I would like to welcome you also. And you have
Thank you,
come
Ashish
at
ji.
very short notice for this program. So, sir, at PNB, we know that you are a very large bank, and you are already doing co-lending. You have done already some co-lending tie-ups. So, from your point of view, this how the co-lending is impacting the last mile for MSM, because we have almost 6 crores of MSMEs in the country. This is a number which I think we have got from the some media news. Although this is not a number which is, I think, as per the MSME portal registration, but the overall number is this 6 crore MSMEs are there. And these MSMEs are in the different part of the country. They are in the rural areas also, the small cities also. And they were looking a solution where somebody can reach to them and can fund them at their doorstep, actually. So how this co-lending is impacting these borrowers from the banking point of view, and the another area is the cost, which Shantanu ji has also covered, the cost of borrowing, because you see ultimately the money lenders are lending to these small borrowers in these small towns, small places. Their cost of borrowing, I know that is a rocket high, actually, which is I think impacting their overall margins or overall growth also. So this how this co-lending is helping this also to the borrowers, and what are the risk factor or the what are the risk faced by the banks in collaborating with NBFC for co-lending? Because this is happening first time where the banks are tying up with the NBFC for co-lending. Earlier, they were doing they are doing the term loan since last many years. So, sir, we would like to understand from you, from your point of view, from PNB point of view, how you are taking this co-lending further, and whatever the tie-ups you have, what are you learning out of that? Over to you, and thank you very much.
Thank you very much, Ashish ji. I think I am audible.
Yes, sir, you are audible.
Oh, so thank you very much, Ashish ji, for having me in this wonderful discussion, because today co-lending is a very important area, not only for bank, but also for NBFCs and for the public as well. I am also welcoming all my co-panelists, learned co-panelists, and good evening to all the viewers of this very important webinar, which has been conducted by the Resurgent India. So Ashish ji, very rightly you have pointed out, and I was listening my co-panelist Mr. Shantanu ji, so he has given a lot of insights on this co-lending. So far as reach of co-lending is concerned, as you were telling that there are 6 crore MSME units in India. First of all, I would like to tell you that out of whatever number is there in the media, the reach of the financial sector is only up to 15%. Remaining MSMEs are neither they are registered and nor any data is available in any type of platform. So whatever we are talking that this much MSME has been funded, this much MSMEs have been helped out. So those are only those 15% MSMEs which are able to get the finance from the bank or from any NBFCs. So this is the very important area where we, and as not only the bank, NBFCs, but also government has to reach and bring them on the regular platform by whatever means. Secondly, sir, this co-lending is a very important move given by the Reserve Bank of India, because the structure which public sector banks and even private sector banks are having, we are not in a position to reach the small MSME units where these NBFCs are in a position to reach because of the high operating cost of collection in public sector banks. We don't have any outsourcing model so far. So all type of recovery and collection is done by the internal staff also only, and which is very costly. So this co-lending model has evolved in such a way that the NBFCs who are reaching to the last mile MSMEs, they are helping MSMEs, which is the main source of our not only GDP, but they are creating a lot of employment in our country. So they are very important. So NBFCs are reaching there, and banks are when entering into this co-lending model. So that is not only helping the customers, but also helping the economy and in the contributing to the growth of the GDP. Now, the second point which you raised about the cost. Suppose previously what was happening in NBFCs, I would like to explain by one simple example. Suppose NBFCs were financing to a customer at the rate of 15%. So the customer was being charged 15% rate. Bank, when we are financing, our rate of interest is around 7% and 8%. In co-lending model, even if we are charging 2% at 2% extra, suppose we are charging 10% instead of 8%, now we are charging 2% extra, and we are charging a rate of interest of 10%. So the blended rate for 80%, if it is charged at 10%, it will come to 8%. And NBFC at 20%, if they are charging the same rate 15%, it will come to 3%. So the blended rate for the customer, which was earlier 15%, now it is 11%. So the gain for the MSME is 4%. Now they are being charged 11%. Bank is in a profit of 2% because earlier we were charging 8%. Now we are charging 10%. Third benefit is also to NBFCs, because they are having enough scaling, they are having enough fund from the bank, because as of now, any private sector bank or public sector bank, they are having enough liquidity. We don't have any problem to tie up with number of NBFCs. So it is a win-win situation, not only for the banks, but also for the NBFCs and for the customers as well, for the MSMEs as well. So it is a fantastic model. Now, if I come on the third, that is risk factor, which you rightly pointed out. What my experience is, because this is a very starting point. So far as though circular came of co-origination in 2018, you rightly pointed out, and now it has been changed as co-lending. But still, a lot of is to be done. More tie-ups are yet to be done, finalized. And wherever they are finalized, our co-lending has been signed and started. It is at a very primary stage. In Punjab National Bank, we have tied up with 4 companies, and all the 4 companies only we have entered into co-lending arrangement with them just 3 months back. And as it was told by the Santanuji, we are having a very fantastic arrangement with Paisalo Digital. Even entire API configuration, so digital model has also been evolved, and the files now we are receiving from the Paisalo through online mode, and it is being done even disbursement through online mode. So total technical integration has happened with the Paisalo, and I'm very honest to share you that this is the first digital arrangement with Paisalo. Now we are forwarding it to other 3 companies, which is Lending Card, then IIFL, and then Vedika. Some 3 or 4 companies are in pipeline, So we are very aggressively now taking this co-lending model. So far as risk is concerned, it is very, as I already told, it is very primary stage as of now to comment anything that what is going to happen in long run. Because what, as a banker and as a public sector banker, what we perceive that in this model, 80% funds are involved from the bank and 20% funds are of NBFCs. So the only risk we perceive that if after some time, when book is built up, as of now, no any huge book is built up in any public sector bank or the entire industry. But when the book is built up, and if company is not of a good repute, so they are not having much on their stake. Stake is of the public sector banks. And total due diligence, total documentation, execution of documents, everything is being done by the these NBFCs. So we are, though we are giving 80% of the fund from our side, but from the sourcing of the lead, then conversion of the lead, then processing, underwriting, for everything we are totally dependent on the NBFCs. So that is one risk which may arise. And to mitigate this risk, what we are doing, that we are selecting the NBFCs on few parameters, like what should be the rate, what should be the NPA level, what should be the standing, that since how long they should be in operation, then what should be their external rating, which is the man behind the show. So on these factors, we are first analyzing the company. And when we see that, yes, the company is of the repute, the man behind the show is of good repute, and they can perform in a long run. So only then we are signing with them and we are going for our lending. So at this point of time, when it is a very early stage, we are mitigating our risk in such a way.
Thank you, sir. Thank you very much. I think you have very transparently given the complete information that how the PNB is looking for co-lending, what tie-ups are already there, and how it is helping to the MSME. So, sir, we have discussed about MSME, and you are in charge of the both the all three areas of co-lending, which is priority, the agri, and MSME, and the housing. Retail, I think retail comes on
Yes.
this. Housing is the only area in the retail, or maybe education also. So can you,
Yes,
sir,
sir.
highlight on the retail point of view, what kind of NBFCs can approach to PNB in the retail area, and how you are looking to tie up with these companies?
Ashish ji, as you are aware that presently in most of the public sector banks, so far as growth is concerned, in comparison to private sector banks, the growth of public sector bank is not at a appropriate level. So not only, if I will talk only Punjab National Bank, I am very aggressive, I am very open to enter into co-lending arrangement with all type of NBFCs, either they are serving in MSME, or they are serving in retail, or they are serving in agriculture. And I'm also open with the, like MSME, I'm open with the secure lending, also unsecured lending. So in housing loan, so far as housing loan segment is concerned, so any housing loan company where their gross NPA is less than 3%, we are open to enter into co-lending arrangement. The company should be A and above. Now we are thinking, because to create some more flexibility, now we are planning to go even for BBB rated companies. So we are open with all three type of NBFCs, either in the retail segment, either it is retail, agri, or MSME, wherever it is.
Okay, sir. So that's great. So one more question, as we have spoken about the housing finance company. So they are governed by RBI now, NHB. So RBI has come out with some recent guidelines that the 60% portfolio should be housing and 40% should be the other than housing, whatever they want to do. So when we were discussing with these companies, they said housing they want to do at their own. So they are because 60% has to be in their books actually. For the 40% part, which is basically not the housing, but it's a kind of MSME loans which they are doing against property. So if they would like to come for that kind of piece for the co-lending, would it be of the interest of the banks, or will there be different view? Because it's a housing finance company, but they want to do the co-lending in the loan against property area.
Definitely, we can do, no problem.
Because,
There also we are open to enter into engagement.
okay.
No any issue. Yes, sir.
Okay, great, sir. Thank you, sir. Thank you very much for your deliberation. So, friends, now we have another young, dynamic personality with us, Mr. Majin Abdullah ji. He is the person who is part of the business head for CRED. So, CRED is a well-known name in the fintech space. So, CRED is a very well-known name in the fintech space, and they are in the fintech, they are NBFC also. And Mr. Abdullah is having very vast experience in the lending space, where he worked in the various organizations earlier also. So I think he was there with the lending card. Then he was with the some other organization also, like Bank Bazaar or the some Standard Chartered Bank. So he is a banker also, and now he's into NBFC and fintech space. So first of all, thank you very much, Mr. Us, and welcome to you. So, friends, I think we are talking co-lending, but it will not be good on our part. We will not talk about the BC partnership also. So, there are many NBFCs which may not fall in the co-lending area from the regulation point of view, and where the BC is one of the another arrangement which is again between banks and NBFC to NBFC, where they can tie up and in this case, this 100% book will be in the books of the bank. So this is, I think, BC is already there in the system since last many years, and some of our friends may not be aware. So I would like to invite Mr. Abdullah to speak on the arrangement which he has with the banks, he has with the NBFC to NBFC, because as per the co-lending guidelines, the banks have set norms, because we have discussed that there is a risk also which can be known not today, maybe later on, what kind of risks are involved. So banks are averse to tie up with the very small NBFCs which are not having sizable AUM or sizable the minimum rating. These are the areas which need to be seen first. So if we see from CRED point of view, first of all, we like to understand how the CRED is working, because as a fintech and NBFC, in which area you are helping the borrowers, and how the small NBFCs can take the route of tie up with the NBFC or fintech company or bank when they are not eligible for co-lending. And other than that, we see this BC arrangement which you have, how this is different from the co-lending, if you can highlight on that also. Over to you, and thank you very much.
Thank you, Mr. Ashish, for this opportunity, and thank you, Resurgent India, for organizing this session. I think we are having an extremely informative session till now.
Thank you.
So just a couple of minutes about CRED. So CRED is a credit card bill payment app. I'm sure all of you would have seen the ads in this IPL, last World Cup, previous IPLs, etc. Right? So CRED is one of those rare company which is not open to all consumer. Right? It's the only so it's not a company. It's more of a community. It's more of a gated community where only consumers who are trustworthy and individuals are trustworthy and affluent are allowed to become members. Right? So you need to have one active credit card, and you need to have at least a bureau score of 750 to become a CRED member, right? So if I talk about India has around 85 crore people who are aged 21 years and above, and these are typically people who can have a financial product, right? Only 2.8 crore Indians are eligible to become a CRED member. Happy to share that out of that 2.8 crore, 1.1 crore Indians are already a CRED members. On CRED, 30% of credit card bill payment that happens in India happens through CRED. So that's around $3.4 billion of credit card bill payment that happens via the CRED app, right? I think during the start of the discussion, we were talking about loan getting disbursed in 30 minutes. You will be surprised to know that we have disbursed more than 2 lakh loans in less than 2 minutes. So in less than 2 minutes of you starting the loan journey on CRED, you will get the money in your account, which you can go. So if you stand in an ATM line, by the time and if you start your loan journey, by the time your turn comes to withdraw, you'll have funds in your bank account and you can withdraw that. And we have disbursed more than 2 lakh loans with that of less than 2 minutes, right? Today, we have created a managed book of 5,000 crore with partnership with banks and NBFCs. And last month, we disbursed around 700 crore. This entirely is unsecured consumer loans. non-SME, only to the consumer, right? So that's the kind of work that CRED has done. All this 5,000 crore of managed balance sheet that we have created in partnership with banks and NBFCs. We didn't have a NBFC, and recently we have acquired an NBFC and will start the operations through this NBFC. We have been doing work through a mode which is very popular among fintechs, which is the BC model with FLDG or BC model without FLDG. Our 100% of lending that we have done has been through this model. We do both BC model with FLDG and BC model without FLDG. The advantage one with the BC model is, even if you're not a regulated entity, even if you're not an NBFC, you can enter the lending business and tie up with banks and NBFC. So that's one core difference, right? One is, if let's say you're not an NBFC, you're not a regulated entity, and yet you want to sort of get into lending business and create scale out of it, you can still get into a BC model with FLDG or without FLDG and start the lending business. So that is one. Second difference, rather, right, between a BC and a co-lending model is, in co-lending, while the capital, and I think Shantanu explained it very well, that with limited capital you can scale, but still you need some capital, right? Because you have to contribute to 20% of the lending, right? In a pure BC model without FLDG, so which means there is a limit to which you can leverage your book, right? There's a limit to which you can leverage the equity capital that you have. In a BC model without FLDG, you can leverage infinite number of times because there's no capital requirement, because you're not putting any capital, right? The second model within BC is the BC model with FLDG. In a BC model with FLDG, typically banks and NBFC ask for a 3% or a 5% cash collateral. So effectively, you can, so if you're an NBFC, you can leverage maybe 4x or 5x. If you become if you do a BC partnership, you can typically, with a 3% or 5% cash collateral, you can leverage 20x or 30x, right? So your capital requirement keeps going down as you move, let's say, from a pure NBFC who does 100% lending on the own book to a co-lending model, to a BC model with FLDG and BC model without FLDG. BC model without FLDG, obviously, guys, just 1 second, just give me 1 second. Sorry, guys. Sorry. So this is one of the core difference, right, between how you can operate in a FL, how you can get into lending business without being a regulated entity. And a lot of fintechs are actually using this model, right? CRED is one fintech which has been using it. The likes of Slice, Uni, MoneyTap, LoanTap, almost all the fintechs have used sort of BC partnerships to work into work closely with banks and NBFCs, right? And I think some of the modus operandi, some of the advantages remain the same, right? You can offer lower rate of interest to the customer. Your capital requirement goes down. For banks also, they can expand the reach, and most of the fintechs, whatever reach they have digital reach, right? So as a bank, you can partner with a digital firm who can help you grow digitally, right? So most of these fintechs will not have a physical presence, brick and mortar presence on the ground, but they will have digital presence, right? So the advantage for bank, one, I think, which Mr. Surinder explained, right? Instead of 8%, you can now lend at 10%. So that advantage remains. In addition, you can partner with fintechs who have great digital reach throughout India, right? And I worked with Lending Card, and I think Surinder sir also spoke about Lending Card. So Lending Card is present, right? So Lending Card has offices just in 2 or 3 cities, but it is present in almost every state and every union territory of India. Lending Card has given a loan also in Andaman. They have given a loan also in Manipur, Meghalaya, Mizoram, Jammu, Kashmir, and Uttarakhand, right? That is because they have their digital reach, right? And they have actually given loan and recovered, and the consumer has repaid their loans in all these pin codes. If I'm not wrong, they have, out of 20,000 pin codes in India, they've disbursed loan in around 9,000 pin codes, right? So that's the kind of reach that banks can have if they can partner with a fintech firm through a BC model with or without FLDG. With FLDG and without FLDG, if I may explain the difference. With FLDG, what happens is any credit risk on the portfolio is taken by the fintech. So tomorrow, if the book goes bad, right, if there's a 90 DPD or a 120 DPD or a 60 DPD on the portfolio, that responsibility will be taken by the fintech and they'll reimburse the bank. Without FLDGs, obviously, the credit risk is on the bank itself, in which case the bank has a greater control and a greater say in deciding the credit policy of the partnership.
Okay. Wonderful. I think it's a great insight which you have given. So one more thing I would like to understand from you, this co-lending is allowed under the priority sector guidelines, priority sector lending, where what I believe that this your piece of lending, which is the consumer lending, may not be covered actually. So what is your suggestion from your point of view? What is your recommendation whether the government should include this also in the priority sector lending or in the co-lending space, or the better way is to go to BC route rather than the co-lending route for the consumer lending?
So I think good question. I think there have been a lot of discussions on this, especially after the digital lending paper, which came, I think, in November, right? Mid of November 2021, right? So to answer your question, yes, this arrangement is not included in the co-lending guidelines as finalized by the RBI. This is currently covered under the outsourcing guidelines or outsourcing of the essential banking functions and the BC partnership guidelines. So that's how today, so these are the regulations which governs the BC partnership that we have today. I think govern RBI, from what we know, and we've made representations to RBI. RBI is likely to come up with digital lending partnership guidelines very soon. I think what it may require is, if you want to do digital lending, you will have to become a regulated entity. So I think CRED, as you know, we have already taken that route and we have become a regulated, we have acquired a regulated entity, right? So I think what may happen is these, the digital lending partnerships, right, between a fintech and a bank would most likely, today they are covered as per outsourcing guidelines. I think tomorrow RBI is likely to come up with digital lending guidelines very soon. White paper came in November 21. The final regulation is like expected in the next 3 to 6 months. So I think these partnerships will be covered as a part of this. And I think what regulator is wanting to do is, it is wanting that people who are significant stakeholders in the lending business should become a regulated entity, should become an RE. And I think a lot of fintechs will have to take a NBFC license, maybe do a small balance sheet, on balance sheet lending, and majorly focus on off balance sheet lending. You may call it co-lending, it may be given a co-origination name, it may come up with a different name, but I think a 100-0 kind of a co-lending model, allow me to call 100-0 as a co-lending model, will be the future for a lot of fintech lending to happen in future. And I think very soon it will get a regulator sign off. The model will get a regulator sign off as well in the form of digital lending regulation.
Okay. Thank you very much, Sir Abdullah, for your deliberation. So, friends, now we have Sams Kabreji. Sams ji is the DGM of SME Business Unit of State Bank of India. And sir, thank you very much for joining with us. And
thank you.
I welcome you. And I am always getting your support whenever we are inviting you, are giving your time. It's really a privilege to us. And Samsi has 20 years of experience in banking in different departments, and currently he's part of this SME business unit, where he's deeply involved in co-lending, whether it's a policy, it's a technology, or it's a I think implementation of the tie-ups also. So nobody can be better than him who can give us the complete idea about the co-lending from signing to execution. Actually, you have seen all the phases, and you are the largest bank of the country. And friends, you know that as Surinder sir also told that banks are not meeting out their priority targets. Many banks in the country are not in a position to meet out the priority target. This co-lending is a good tool where I think I was joining hands with the NBFCs. They can, I think, get these priority targets to meet out at the end of the year, or they can increase their margins also. This is told that if they are charging 8% and then the co-lending, if they charge more, even the ultimate borrower is getting the advantage of it. So the margins can be increased. Cross-selling can be there, because you know that NBFCs are having a single product of lending, but banks are having multiple products. So this can be an opportunity for the banks where they can cross-sell the product to their borrowers, ultimate borrowers. And in another way, the risk can be reduced also, because you know that the recovery rate of NBFC is, I think, the better than the banks. So, sir, from this point of view, we would like to understand how this co-lending arrangement is helping the underserved and the unserved people actually. Although it's a beginning, but I believe the future is very bright. And you have practically seen, you have already tied up with some of the NBFC, the disbursements are already started. So whether really it is helping the people who are underserved and unserved, And the underwriting process. So there are always a discussion on the underwriting process, because you know that NBFCs are having the informal income kind of acceptability. They are not asking the income tax returns. They are having the other processes also, which are more relaxed. Banks are having their own system. 3 years profitability should be there, and these things are there. So how this gap is now narrowing, or how you are overcoming these gaps whenever the NBFC are approaching to you for lending to MSME under co-lending models. Over to you, and thank you very much, sir.
Thank you, Ashish. Am I audible?
Yes, sir.
Thank you very much. Thanks to everybody who has been this part of this, and you have taken a very noble cause. Always taking Resurgent has always been taking a very relevant topic, and it has got significance and it benefits to all.
Thank you, sir.
So co-lending, as we have seen that it is a evolving phase. Earlier coordination could not work out because of the several issues. Then RBI come up with the concept of co-lending. As you rightly said, that the idea behind the co-lending is to serve the underserved and unserved. And I must say that I've seen that, I'm experiencing that. This is what we can say, that this is meeting the objective of the serving the unserved and underserved. Because NBFCs has got a wherewithal. NBFCs can reach to the last mile MSME customers, borrowers, even in the informal sector. And the bank has got the capital. So the collaboration and the combination is working beautifully. I am seeing it that, and I am experiencing also. We have got tie-up, we have undergone the agreement, MOUs, then proposals will start flowing in. Then we have got the deed of assignment signing, then disbursement also taking place. So this is the issue is always there. The challenge will always be there, but it is a learning process. And both of us, NBFC and the bank, both are learning. An MSME sector, as we have seen during the last so many years, despite the fact that 90% of the, if you can say that 90% of the units under MSME belongs or contributed to by micro enterprise, 90%, more than 90% by that. There is a data that 6.33 crores of MSMEs are there. More than 95% are the micros. And when we see the data of the credit, there are something around 112 lakhs crore of credit into the system. Hardly 10% of that credit is going to the micro. This is the big challenge, and this is the what you call the objective, that to how to reach those micro units. So this co-lending with NBFC and between the bank, I'm looking forward that this will definitely meet that challenge, reach all the micro enterprises. So as of now, just to hold on. So as you said, the major issue, you said you look the challenges of the underwriting. There a view has been taken between the NBFCs and the bank. The NBFC serves the customers. NBFC knows the borrowers. NBFC reaches them. And as of now, the discussion is going on that we have to move from the balance sheet funding to the cash flow based funding. And this is the right place we have started moving in. What we are doing, we have given the leeway, or you can say liberty, to the NBFC. They decide about the underwriting process, because it is they who has to source the proposal, who has to do the sanction, disbursement, make the recovery. So NBFC knows better the borrower. As per their decision, we are aligning our policies, especially the lending underwriting policies, to their requirement. They are subject to some tuning, subject to some Mr. Antonio has also highlighted about the accounting policies. Some of the standards NBFCs are following of the state bank, and bank is also following some of the policies of the NBFC. It's again a collaboration. It's a coming together and achieving the larger objective. So what we are observing that the proposals that are sourced, sanctioned, and disbursed by NBFC, we are checking the data points, whatever the data points and the data or the informations on the basis of which the loan has been underwritten. Just we are checking that, verifying that facts, and the disbursement is taking place as per the 80-20 ratio. When I read the circular also, that to ensure the regulatory guidelines are not violated, the credit officials need to verify the credit appraisal note and supporting documents for approving the sanction of individual loan by NBFC based on a checklist for the product. So, however, the credit officials will have the discretion for independent loan appraisal wherever needed regarding the reasons thereof. But however, we understand that NBFC has decided, NBFC has underwritten, and we have checked it, we have cross-checked it, and we have understood that this is the basically the most NBFCs are following up the cash flow based lending. And that cash flow based lending, the beautiful part is the account statement and the GST. So on the basis of that, we had the underwriting and the limits are sanctioned, and we go ahead with that disbursement. And the recovery process is taken by the NBFC. There are long miles to go. There are a long way to go. And we are going for tie-up for various other NBFCs. RBI has given the lots of flexibilities in this case. The only challenge we see that the technology, as Anthony has also said, the technology of the escrow mechanism, the technology of the data points, data flowing from the NBFCs to the banks, we are working on it. And once that challenge is overtaken, I think the co-lending will work a wonder, will bring lots of changes, wonderful changes in serving this ecosystem, especially reaching to all the MSMEs. Yeah, that's it.
Thank you, sir. Thank you very much. I think you have given the I think very good insight also. This underwriting on the cash flow method, a new thing for banks, because most of the banks were following the balance sheet based approach, balance sheet based lending. So it may take some time, but the acceptability is there, subject to the various parameters. So I think on the coming time, these gaps will also be filled up. And hopefully, the informal income or the underserved and unserved people will get the more and more money in their hand, and they can grow fast also. So, friends, I think we had a good deliberation today where we have tried to understand the entire co-lending process from signing to execution. And our speakers have also done very well the deliberation where they have transparently discussed about the various processes involved, various things are there which are coming under the entire process. But we have many questions also. So our audience or the people who are participating in this webinar, they have many questions in their mind. I'll take some of the questions from the questions list. So one is that I think which we have already taken. I think how are you planning to bridge the trust deficit? So this trust deficit, I think Dikshitji, you can take up this question, Dikshit sir. So, sir, you are on mute, sir. You are on mute, sir.
Ashishji, what is the question? Sorry, I was.
No, so the question is how are you planning to bridge the trust deficit?
I don't think there is a issue of trust deficit as of now, because we are very aggressively and very frequently doing this co-lending business. We are tying up with various companies, so I don't perceive any such type of issue.
Okay, so there is no such issue as of today in this trust deficit kind of. So practically, you are tying up with the regulated entity. So it's not that the tie-up is, yes.
We are tying up with the regulated entities, and as per the RBI guidelines. So I don't think there is any trust deficit out there. There has been any breach of trust between the co-lending partners and banks as of now.
So there is one very good question, sir. Thank you very much for your reply. Uh, Somebody has asked, Mr. R.C. Kumar has asked this question: what will be the basis of risk weight to be assigned to the portfolio under co-lending? Which external credit rating to the of the NBFC or just the unrated portfolio? So under co-lending, practically the portfolio which you will get at 80% portfolio, how this the risk weight will be decided on that portfolio? Sir, Kavresh sir, you are on mute.
Sorry, yeah, Ashish ji.
Yeah.
Sorry, can you repeat the question?
Yeah, sir. The question is how the risk weight is assigned to the portfolio under co-lending, whether it's dependent on the external credit rating of the NBFC or it's an unrated portfolio.
It's an unrated portfolio. It's not on the basis of the exposure. Is ultimately on the borrowers. Exposure is on the borrowers. So as of now, we are not taking risk on the, as such we can say the NBFC. It is a co-lending. It's not that we are funding. See, again, these NBFCs are also funded by the banks. And again, the clarity there is in this case, the RBI, there is, I think clarity, if required, may come later on. But as of now, as per my understanding, it is on the borrower, the risk we are taking.
Yes, Tabreji, very rightly you are saying it is only on the borrowers, because we are ultimately we are funding to the borrowers. We are the last mile security is created by the borrowers only.
Yes, yes.
Rather, I will add in that this under this model, the advantage is that for lending to NBFC, there is I think some exposure norms. There are norms for the exposure norms, but for the co-lending, it will not fall under that exposure norm. So
no, it will not fall. See, yesterday, I think day before, you are talking about LEF, I suppose.
Yeah.
Large exposure for that has come. LEF concept has come by the RBI for the NBFC. That is entirely different from the co-lending. That is an exposure upon the NBFCs. Large exposure framework you are talking about.
Ashish ji, sorry, if you permit, I would like to leave because I have another meeting.
Okay, sir. So we are going to finish that session within 2 minutes only, sir. So thank you very much. So friends, I think we have almost covered the questions which have been asked by the audience, which are very relevant question. And now I would like to summarize that we had a good discussion on the co-lending, which might be helpful to all the audience, and they will be more learned. And we have the speakers or the panelists who are very eminent, and they have giving the complete information without any hesitation also. So that's a good part. And I believe this will help to all of you. So friends, I would like to thank you to to participate in this webinar and listening us patiently and making it more interactive also. I believe the future co-lending is very bright. There might be some hiccups, but I think the keeping in mind the interest of the banks and NBFC, these hiccups can be overcome very fast. And this can be a very, very good I think tool for banks and NBFCs or the ultimate borrower. So it's a win-win for everybody, but I believe. And the borrower are getting money at the lower rate. Their money is reaching at their doorstep. Banks are in a position to tie up with NBFC, and their liquidity can be utilized there also. They can be lower NPA. For NBFC, it's a money is raw material actually. So they are getting money either through co-lending or own lending. Practically, they are earning something out of it. So thank you very much. Thank you all for joining with us, and wish you all very happy and healthy in this today's environment. Thank you very much. Thank you. Thank you all. Thank you, sir.
Thank you very much, Ashish ji.
Thank you, sir. Thank you, everybody.
Thank you.